delay. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. I think I added on 4 names. Back into Pins, Meta, Shop, and Snap. I liquidated Microsoft in the close, which is another one that I had bought the dip on today. All right, let's discuss. Let's discuss. I got stuck in a meeting, but I got that rally into the close that I had typed into the VTF that I was looking for there. So that gives us a decent looking daily candle, which is what I wanted. I was a little bit nervous here. There's so much volatility still in this market. It's really wild. But the SPYs, breaking up, and then this big pullback off the gap fill when we were back down at 391.60 with a half hour to go or so in the market. We easily could have closed at 391.50 or below. I didn't think it was going to happen. I thought we would get a bounce in the close, which we did, but we easily could have closed below 391.50. If we closed down at 391.50, I'd be looking at a very, very different candle here. You can just see my yellow line is going to whatever. I'm trying to get to 391.50, whatever. It's a little bit below, but you could just see where we were set to close at 330. And now of course there's a bad print here, but we could have had this candle be primarily an upside tail, and that could have been a problem, because what I was really looking for, this false print is annoying me because now I got this fake tail here. Let me go to the Qs. What I was really looking for was this gap down into equilibrium to create a potential pivot point for us. So I would rather look at the spot. Okay, good, it fixed itself. We've been really patient the last few days, right? We had the CPI day. It was a barn burner. We got some follow through on the next day. We had been 2 days in a row here closing at like $10 plus extended from the ADMA. Very hard to get continuation. We discussed that a lot. These 3 days here, we really had rest. Yesterday was an inside day for the SPYs. A little bit weaker for the Qs, a little bit weaker for the IWM. They were not inside days, they were weaker. But you had these few days of rest here. The last few trading sessions, it's been a message of patience, right? Let's be patient. We need this moving average to catch up. We need further price and time correction, and then that can maybe set us up for continuation to the upside based on a combined technical and fundamental thesis, at least that I have, where our short-term technicals are in an uptrend, our intermediate-term technicals I think have turned around as well, and our larger time frame technicals are still bearish. So because that larger time frame is still bearish, there still is a decent probability of failure, because if you're looking at a small time frame that's bullish and a big time frame that's bearish, that can't stay that way. Eventually, that small time frame stays bullish for so long that the big time frame turns around and becomes bullish, or more likely the big time frame stays bearish and that small time frame bullishness fails and rolls back down. So it is very notable that we do not have full time frame continuity here. We've got that small time frame that's definitely in an uptrend, the intermediate time frame that's improved a lot and I would argue has become bullish, but that big time frame is still bearish. And most of the time, if you have competing time frames, competing messages, the bigger time frame becomes the eventual winner on that. So that's kind of the technical outlook, but if you combine that with at least my thought process on a more fundamental outlook with where we are into the end of the year here, where we've got strong seasonality, we've got that improvement on the inflation number, we've got a chatter of a potential at some point slow down to pause from the Fed, I have kind of had this thought process of a rally potentially more into the end of the year here, or at least for the month of November, potentially through the end of the year, and then we're going from a change in story here that begins to evolve a little bit from CPI to economy. And I think that if we're going to see that economy part of it, which could be more in line with the big time frame, which is still bearish, and again technically has a higher probability of being correct compared to the small time frame, then we can at some point begin to really roll back down to 2023 as we see what a potential recession looks like, soft landing, hard landing, all that stuff. And now once we start getting too deep into 2023 thought process, that's just too far out to me to feel comfortable with any sort of calls. But that's kind of my technical slash fundamental process with at least where we are right now. And we know that bear market rallies, which you should still assume for the moment that this is a bear market rally and not an absolute bottom, especially with the big time frame still being bearish. We do know that these bear market rallies can be big, ferocious, vicious. We've seen it in the past. Again, that July-August rally, the March rally, we've seen that in the past. So, and you combine it with sentiment and positioning, there is a lot of fuel out there for a continued rally, especially if we see like a November CPI that continues to deteriorate. At the same time, we know, and we said this from day one here on this improved CPI number, that first of all, it's just one number, and the Fed's been reminding that the Fed members have been reminding us of that a lot. And the Fed is going to try to do anything and everything they can with their language, I think, to really kind of hold us down. So that all leads to pre-market this morning. 4 a.m. comes around. The market futures were relatively flat. We started kind of grinding down, and then eventually Bullard started speaking, and that really kind of accelerated our pre-market downtrend that we were in. And you can see that here. This pre-market downtrend was really vicious, really scary. This is full starting at 4 a.m. here all the way through to the market open. We were in this just gross pattern of lower highs and lower lows. But what does this do? And you could look at this and you could be scared, and you probably should be scared if you've got longs on. But we got to think about the big picture. What was this doing for us on our big picture? It was sending us down into this equilibrium area. We also know that the low of the CPI, the intraday low of the CPI here at 385.64 is really important. So we're approaching that. We're getting back down to 390. I did feel there was room to the downside here, even to as low as 388. But this is the area here into this equilibrium zone after 3 days of rest and 1 morning of a big gap down price correction. This is the area where I've consistently said I will look to be a little bit more aggressive again to the long side of the market after having really reduced size and liquidated positions into the degree of extension that we had up here. So again, got out of my shop position, got out of my snap position, got out of my Microsoft position, got out of my pins position, got out of my meta position, kept other names obviously, but had really reduced size in them on the way up. And then it was into this gap down right as we were kind of going into the morning meeting and as the market was opening, that I was typing into the chat and communicating to you guys that I was finally looking to be a little bit more aggressive today after being pretty passive the last few trading sessions because of where we were and because of the degree of extension that the market was kind of dealing with. So that was it. I was a bit more aggressive based on everything we just discussed. It's a common gap down into equilibrium on a small to medium time frame trend that has become increasingly bullish with, I think, a kind of stronger, shorter term fundamental backdrop that we're dealing with as we've seen a little bit of an improvement on that inflation. And it was specifically, I half joked into the VTF at one point when the market had, just run at highs of the day and was kind of filling its gap, that I would like to thank Fed Chairperson Bullard for the hawkish commentary this morning that led to such a great buying opportunity by driving this market down into kind of its equilibrium zone that we could actually take advantage of. Because I'm looking at the data, and look, the Fed people, as much as we're giving them a hard time, and maybe that's partly rightly so, about them being, behind the 8 ball, or I don't think that's the right term. Basically them being late on, beginning to hike and, pulling off on QE and everything. These are very bright people. They see the same data that we see. They see the same housing data that was referenced in Pat's note, the same housing data that I was looking at last night. They see the same data that NVIDIA provided on their earnings call last night when they're talking about supply chain normalization of the chips, which this is all the important stuff that will lead to, over time, a further deterioration of the inflation number. And I'm sure that they saw the same chart that I was looking at last night, which I didn't try to look for today, and I probably should have. that Goldman produced on their expectations. I think it was expectations of PCE, on how it basically went, straight vertical, just to their expectation is basically, thanks Rich, to come straight down. And then again, that all leads to a conversation of inflation into economy. What does the economic damage look like? Because again, if you read Pat's note on which got heavily into housing today, there's a lot of great data in there if you want to make the argument about the improving inflation situation that I'm talking about, that's going to continue to hit over time. And there's also a lot of that same data is really scary on what it could potentially mean for the economy, and how the housing market could potentially go into like a total freeze up, and what that can do for the average consumer that's out there, and then the repercussions that could have on the companies that make up the S&P. But that's why I think the timeline kind of is what it is, and the market can do what I think it might be able to do here. And the technicals, though, always have to be the confirming factors. And right now, it's just a gap down into the equilibrium, but still above this high. I want to come in and I want to be able to buy that dip, and that's what I did. And for me, it turned into being a really good opportunity, and it sounds like some of you guys took advantage of that as well. And broadly, what was I looking at today? I was heavily looking at the FANG names. So I mentioned that I was adding to Apple. I think I bought Apple, I think I was buying 146 in Apple pre-market, I think. So I got better than the low of the day in some of these names, which was great. Amazon ended up being super disappointing, but I was able to buy some Amazon pre-market at $95. Gave this great pop. I had an offer 2 cents above the high of the day in that Amazon that did not get filled. That totally sucked. But Microsoft was an awesome one. I got great stock in Microsoft early on as well. Was able to catch this move. Meta was somewhere in the middle. I bought this one also. I bought some 111, and then I had also bought some 110, kind of in that area. This move was not as good as Apple, which was fantastic. Not as good as Microsoft, which was fantastic. Not as bad as Amazon. So Meta was kind of somewhere in the middle. And Google was pretty good too, though tricky. A couple of these ones that broke their opening low were very difficult to potentially hold, like Google as an example. But if you're able to hold through that, then you're able to kind of get a really good move there. I also had gotten back into Shopify. I was able to get filled at $37 this morning. I got back into Snap. I was buying Snap at like $10.75 or so initially. Caught this pop, reloaded it, caught this little move here. I think I reloaded it again and was able to kind of capture this move into the close. So just a bunch of really good stuff, and it was all just kind of based on the thesis of the market there, and kind of what we were looking at. Energy eventually filled the gap. It was weaker off the open, but energy, we talked about potentially going long off of or into $90. So low of the day is 90.28. I don't know if anybody caught that. The financials I did not like as much for today, but they ended up closing decently as well. But they looked like they were pretty tricky early on. This biotech ETF just is like the bane of my existence recently. This just doesn't want to do anything with the market. It obviously trades a lot with the IWM, and the IWM has been weak. But this XBI biotech ETF has just been pretty garbage. So that was probably the one bigger disappointment of my day today. And I thought I had one other thing. I can't remember. Some individual stocks that we had discussed was Macy's for a move through 2150. Sounds like a few of you guys caught that. This was just a great opening momentum move on what looked like a really solid earnings report. NVIDIA, I don't know if anybody was able to capture NVIDIA or AMD. I wanted a little bit lower pricing. For me, for NVIDIA, I was looking at the space between 153 and 155 off the open. I think that the opening low was like, 155 and change? Yeah, 155... Where's the low? There it is. Oh, never mind. Didn't even get that close at all. I thought it got lower than that. Maybe pre-market it did. Or am I reading that wrong? Oh, I am misreading that. Sorry, my level 1 data is wrong? Level 1 data wrong? Oh, no, never mind. Sorry, I'm just misreading it. 155.83 was the low. So I didn't quite get that one. AMD, I wanted upper 60s. I didn't quite get that one. But that's more what I was doing today. It was a little bit of a shopping spree in some regards. I'm seeing a couple of these names like Apple and Amazon upticking a little bit right now after hours. We got PanW came out after hours. That's trading up. Looks like it initially downticked because the market didn't like that they were buying somebody. I didn't look at the details on it, but the PanW numbers on a brief look pretty good. AMAT on a brief look also looks pretty good, trading up a little bit. And that was another actual factor that contributed to my thought process when I was thinking about buying stuff today. Was I'm just looking at the important, or what I thought were the more important earnings reports. I thought that they all looked great. The NVIDIA report was fine. The BABA report I actually thought was solid. I was surprised that they were gapping it down, but I thought maybe there was Chinese worries there. The Macy's report I thought looked great and it traded really well. BJ's I actually thought was a pretty good report too. They ended up gapping this thing down, but kind of buying it back up. So one other important, Cisco report was decent, a little bit of a slower mover, and there was one other one that I'm missing that I think was more retail, but it was, you know, I'm looking at all these earnings reports that are coming out really good, and I'm trying to figure out, you know, why is this market even gapping down today outside of Bullard, who's been kind of traditionally hawkish this year, even more so compared to a lot of Fed members, talking this market down a little bit, but leading to an opportunity. So that is all I've got for you guys for today. I think it was a really good day. I hope you guys were able to participate in that thought process from the morning meeting because we nailed it. That's it. Happy to answer any questions that you guys may have. You got tagged on the market rip. Yeah. You had to kind of have that conviction off the open on that, and that's it's very hard to do that on some of those biggest days. I have found, like when the market's really gapping down in some key spots, and it's like gapping down. It's always gapping down for a reason, right? And when you're looking at that and you're like, oh man, this market's off so much, it can sometimes be difficult to come in on the other side of the trade and take advantage of it. But I find that those actually for me are a lot of my best days. Like a day like today, or a day like the CPI day that was in October for September's number, or like a really big day for me was the day that, really big day for us, because it was another day that I was like super bullish in the morning meeting and off the open, was the day that Russia invaded Ukraine back there. You know, all those mornings always look super scary, and you know, can sometimes be really good opportunities if you're just taking a step back and willing to understand kind of the technical picture, whether, you know, with this it was a degree of extension, or here it was also a degree of extension plus an analysis of history of war and the markets basically that we were doing at that time that led to us having the conviction to buy. And then, you know, today a little bit different, but a gap down into technical equilibrium post the CPI with like an improving, you know, news picture out there. So so yeah, what else from Mark? My theory, which means nothing, is that I think this upcoming recession will not be as bad as previous recessions. That is what I think also. That is what I think also. I mean, you could even make the argument that we're already in a recession. I've made that argument. And I was saying this earlier in the year when we were talking about recession. Everyone earlier in the year was using this R word, like it was this, you know, recession means like the end of the world. And I have had a few meetings back earlier in the year where I was like, you know, wait a minute. Not all recessions are created equal. You know, are we talking about like the Great Depression coming back, or are we talking about your run-of-the-mill recession that happens once every, I don't remember what the statistics are, once every 7 years or something like that, where, you know, you get a couple quarters of declining GDP and we work our way back up, or what have you. But you know, with this recession in particular, there's still so much, and this is something that the Fed points to when the market's at lows and they don't want the market to go down anymore so they can engineer a soft landing. This recession is really so far just a pullback in an extremely frothy job market. As long as you're not working for, I guess, Twitter, you're probably okay. From Paul, thoughts on Macy's for a swing target? Well, your degree of extension here on Macy's after today makes it, I think, a little bit difficult to not be thinking about just booking a little bit on that extension. With that said, it was because of news on earnings, and it was only a day one, so you could easily get a day two. But you don't really have anything to the left here until you're getting up to $25. So that would be like a bigger picture target. I'd be surprised if you saw a repeat of this candle tomorrow and you're almost at $25, though. It just tends to not be how Macy's trades. With that said, we saw, this was that was back in 2021, where we saw some periods of really big movements that were kind of coming out of Macy's back there. So you could get a day two. You could even see here there's 3 big days in a row. None of them were obviously as big as this earnings report here today. So I don't hate the idea, depending on your size, to, sell someone in the close. Obviously the market's closed now. What's the spread look like after hours? Yeah, spread's not too bad after hours. Inside bid is actually above where Macy's closed right now, if you needed to whack out of a little. But otherwise, trim and trail. An inside day tomorrow would be nice. Maybe you get a day two, but $25 would be a bigger picture target that I would look for on that. From Tom, trying to switch from a scalping to a buy and a longer term mindset. Your psychology training references journaling, meditation, and affirmations. Can you give an example of how you would journal your emotional mindset regarding losses when you first started out? I'm assuming you're no longer throwing things. Pretty rarely. Pretty rarely on that. So for sure. I mean, I guess just before we get into that more mindset stuff, I would just say, an adjustment in trading strategies is a very difficult thing to do. What you're describing, being a pure scalper into trying to have a little bit of a longer term mindset, and I hope that longer term mindset is more particularly on the reward side. I like the idea of keeping risk tight. So what I always kind of preach, or what I'm always looking for, is looking for smaller time frame risk for larger time frame reward. Again, risk that's on a 5-minute chart, risk that's on a 15-minute chart, but we're trading in the direction of the daily chart because we're looking for that larger time frame reward that can come in over the course of a full day or several days. So keep that risk tight when you're thinking about having a longer time frame. But when it's working in your favor and you've got the risk covered, don't be afraid to hold also. So when it comes to doing your journaling, and let me just reread that portion of the question. An example of how you would journal your emotional mindset regarding losses. Sure. So when it comes to journaling, you should probably journal, every trade that you took that day. And you want to obviously write out the technical mechanics. Why were you involved in the trade? Where was your stop loss? Why was your stop loss where it was? What is the risk spacing wise on the trade? What is the reward potential that you think can come of that trade, and why? What the game plan is for reward maximization after you have the game plan and for risk management. When you have all that kind of set, and then you're writing out how the trade worked and if you followed through on everything properly, you'll also want to try to keep mental note of what your emotions were throughout that process and if they affected the way that you took the trade. You're going to have emotions no matter what. I know I certainly do. One of the bigger psychological positive adjustments that I've been able to make in my own trading over the years is not necessarily that I don't lose control of my emotions or become upset anymore. I absolutely do. It's that I don't want to say never, because never is a big word. I very rarely will let it actually affect my decision making in regards to the trading that I'm doing. So you want to pay attention to both how you were feeling, but also if it affected what you were actually doing. And that's the dangerous part, by the way. It's one thing to feel a certain way and to recognize that you feel a certain way. It's something entirely different to let it affect the decisions that you're making on a pre-thought out game plan, because everything that you should be doing, by the way, should be based on a pre-thought out game plan. So how are you feeling when you entered the trade? Were you like in a bad mindset because your last two trades failed and you're down some P&L on the day going into that trade? Or is it the opposite? You were like just super determined and focused on doing the right things because the first couple trades didn't work out? Were your first few trades working really well, and then you were having a thought process of, like what we call being profit drunk, where then you're not being as discerning on the next trades because the first trades worked out. You want to be able to try to pay attention to all those things and write it out. Maybe you need to write it out in real time as you're taking that trade, or maybe you can remember it and write it out after the fact. So recognize that, and then recognize whether or not it changed the game plan. So you should have, before you entered the trade, a very specific game plan on what you're doing. And now, did you follow what was written on the piece of paper? If the answer is yes, great, check off the box. If the answer is no, well, why the heck did you not follow your premeditated, pre-thought out game plan on the trade? And probably 19 times out of 20, the reason why you would not follow a pre-planned, premeditated trade where you have all the risk limits in place and the reward game planning in place would be because you got in your own head in some way. You overwatch the trade. A common question that I get from people sometimes, and this is definitely a mistake, is you get in the trade, you're not getting the immediate gratification you were looking for of the trade immediately moving in your favor, and then you're like, oh man, I better just get out of this trade. You're not letting your game plan play out. That to me, that's a mistake, right? When you created the game plan, you entered the trade, follow what's on the piece of paper. And if you pull away from that, somehow you got into your own head. And you need to figure out why. Because that's the stuff, in my opinion, that's really bad. Doesn't matter if you had a premeditated game plan, and even if your game plan was off by a little bit, you can make adjustments on that over time, and your trade just didn't work out. It's something entirely different if you let something affect that game plan where you're not following it, and you're fighting stock, or you're getting out too early, or you're getting out at break even, or whatever incorrect thing that you're doing where you're not following your game plan. So I hope that helps, Tom. From Zachary, I have been trying to wait 30 minutes and then find a spot to get in, but I end up missing the moves or thinking I'm too late to get in. I'm thinking I should start by getting in off the open in the direction. We're guessing pre-market. I don't like that term. Any advice for trading the open? So yeah, and I feel like you might have asked the question in the past yourself, or maybe it was somebody else, about hey, I'm a newer trader and I struggle to trade off the open or something like that, and I find that I trade better after 30 minutes. What should I do? Should I not trade off the open? Because I've mentioned that for myself, my best time of the day is the open. That's my favorite time to execute trade. The closer to 9:30, the better. The longer I get away from 9:30, the worse for me personally, broadly. But I've seen statistics that show that most of the best traders tend to trade best if they're trading off the open, but most newer traders actually tend to not do well off the open and tend to do best between 10 and 11, because things have calmed down a little bit, but there's still some movement, as opposed to midday where it just becomes a lot more choppy and messy and the movement's not necessarily there. So but with that said, I don't think that you should just be buying by guessing the direction that we're having based on the conversation pre-market, unless you're doing it with small feeler type size. We're looking to kind of build in a little bit, which is a little bit more of what I'm doing a lot. You want to see how the market is moving, how it's breaking off levels, or you're getting the initial move off the open and it's corresponding to what the game plan was, and then you're buying it 932 versus an opening low, something like that. Or if the trade setup is there, if we're looking at Macy's at 2150 and Macy's is triggering off the open, well, that's a very simple trade. You know what the level is. 2150 is the level. It's what we're looking at. It's what we're looking to buy, and you're executing through the level, and it doesn't matter what time of the day it is, and you use the appropriate stop. So I've always felt that trading the open is like the same as almost trading any other type of day or any other time of day as far as trade setups go. It's just that you have the gap and things are much faster. So and also more liquid. So if things are moving, you take that trade and things are moving against you, and you can't get that stop in quickly enough, you can do some real damage to yourself. You guys gotta be able to be quick on the keyboard. You gotta be able to be quick on the keyboard with your fingers and your getting your orders in to be able to purchase stock where you need to, getting that stop loss in, getting those offers out. Andy was nice enough to put himself out there to say that he isn't using hotkeys on his trading this morning. It's one of the things that he needs to work on. That blows my mind that anyone doesn't trade off hotkeys. Like, I don't know how you could trade the open if you don't trade using hotkeys to be able to get the orders in. And if you've never traded using hotkeys, it's an adjustment. You're going to press the wrong button when you first start using hotkeys trading. Thanks, Andy. You are going to press the wrong button when you first start using hotkeys. I still occasionally press the wrong button, but it's a necessary evil to get through that learning phase because of the speed difference. I can get in multiple orders per second by using hotkeys. Multiple bids and offers and stops like per second, and it's just because I've been using it. I mean, come on, some of you guys are older than me, but some of you guys are younger than me, and you guys that are younger than me definitely have no excuse. I know you guys grew up playing Xbox or whatever in computer games, so don't tell me you can't learn to use these keys and get fast on the keys. And heck, even if you're older than me, you had Nintendo and Atari to learn to be able to press buttons on. Me, I was a Super Nintendo guy when I was a kid. Still like those games sometimes for a fun Saturday night and a beer or something. So I hope that helps a bit, Zachary. From Rich, on days like today, if we are buying the open, then is the prop route the low of the day or the pre-market low? Either. I think it depends on the game plan that you used for yourself when you executed the trade. I think that both of those are potentially prop routes. So I'm fine with either. Thanks for the question, Rich. From PS, I watched an interview with Ken Griffin yesterday. He said his team thinks there will be no recession next year. He is very skeptical of his team's view. He went on to say his team has a great track record of being right. That's really good information. That's really good information. I mean, I would still make the argument that I'm a stickler. I went to NYU. I majored in economics, and I'm the first to say that studying economics, and I was a minor in philosophy. Studying economics and philosophy basically means that I didn't really learn anything in college. I learned a whole lot of theory, and I would say that I learned how to think, which is great. But the one thing for my economics major that I am going to stick with is that the definition of a recession is 2 quarters in a row of declining GDP. So everyone's debating whether or not we're in a recession or not. I'm going to still say we are already in a recession. It's just an extremely, extremely mild recession because of where we're coming from. And I guess the argument is, no one else agrees with me. I know that there's a board or whatever, and the economic board is actually the one who has to declare those things, whatever that board is called. And maybe that actually comes into play in 2023 when the jobs, come down a little bit further and GDP declines a little bit further or whatever it is. But I learned that in economics class. That piece of paper that I've got lying on the floor at my parents' house somewhere is worth like a couple $100,000. Apparently. And if I learned anything from that stupid piece of paper, it's that a recession is 2 declining quarters of GDP. So from and again, thanks for the information there. From Mark, Apple looks like it could have a nice measured move up on the daily. All things being equal, I think 160 could be in the cards. Yeah. It's not a bold call. Any thoughts? Price action rules the day, but curious if you use targets to help you hold for a longer move. I do. I do. I still actually have a big picture target of $180 in Apple that I'm going to. My game plan on my position that I have on Apple that I have held to some degree from this entire move up to this entire move down to this entire move up to this entire move down to this entire move up is still 180, but it's with scaling in and scaling out. So by the top of this move here in August, I had scaled down to, it basically got to my target. I had scaled down to just about nothing in Apple. And then, was sizing up again and was really sizing up into this move and into these lows. And I thought that earnings report was good. So yeah, I agree with you, of course. I think getting back up to this resistance around 158 on the daily chart is very reasonable. I thought that the Apple earnings report was, good. And initially traded well on it, and then, this pullback here was caused by a combination of things. One was the Chinese COVID lockdowns and what was happening with the Foxconn factory, and also just the fact that they were selling FANG like crazy into this 4-day move, and that's when those other names got, really extended the downside that led to a buying opportunity. I'm still broadly bullish on Apple. I think the technicals look good. You got a great pivot here right where you needed it to. It got back above $150. So yeah, getting back up to 158 resistance, or a little bit higher into 160, that makes plenty of sense to me. But then the question is, if we're getting above that 200-day, do you start to go into a further feedback cycle of buying that becomes a little bit more similar to what we saw back here, that can then actually shoot you up further? So we'll see. Scrolling through here. Mustafa loves his hotkeys and hot buttons. I love them too. Good idea to size down when making an adjustment. It's a great advice from Mike Reed there. When you are adjusting strategies, which is something that inherently I think happens over the course of a trading career because market environments change, it's a great idea to size down when you're going through that adjustment period, because you're going to make mistakes. You got to fine tune it, and you're better off doing it with smaller numbers and smaller P&L in the process. From Hemming, do you have any specific reason to make you think this time the short-term bullish market may reverse long-term bearish market this time? I'm not saying that. What's your logic? This is all about the CPI getting better. I'm actually still saying that it's short-term bullish and not necessarily long-term bullish. I think a lot of that, I think the long-term bullish-bearish argument is going to be heavily dependent on the degree of recession or no recession, or Ken Griffin versus his team type of situation into 2023. So I'm more short time frame bullish. I'm more short time frame bullish from kind of here into the end of the year is my thought process, based on the logic of I think that the inflation numbers are going to get better before we see the deterioration in the economy that could potentially bring us down to have us be bigger time frame bearish. So hope that helps. From PS again, there are people that think the next year recession will be off the charts horrible, and few that no recession. This dichotomy is reflected in our Fed speakers that yank the tape 7 times a day. Yeah. Yeah, the Fed speaker chat has been getting tiresome. It's been getting tiresome, though I appreciate Bullard for giving us the opportunity to buy the dip today. Yeah, I've seen both sides of the argument. If you read Pat's note again this morning on that worst case scenario of the housing market, it's scary. I don't see, there was one portion of the 3 factors in there that got mentioned. Factor number 1 was shoot, I can't fully remember off the top of my head, but one factor was that mortgage rates are basically higher, so it's more expensive to have it. I think 2 was pricing, and 3 was no more building because input costs are too high. That was the one that I took the most issue with of those 3 points. because the data that I was looking at yesterday showed that there is still a lot of new housing that, especially apartment housing, that is set to come online, that is still actually a hangover from when demand was a lot stronger, because, you know, people who have demand. I mean, I could just tell you guys from, you know, my place out in Idaho, and I've chatted to you guys about this a little bit in the past. I, you know, have a place out in Idaho, got some acreage out there, have a really nice main house, big main house, 5 bedrooms, and I was looking at building a second house on the property, like a smaller cottage type of house. I don't remember what I asked for on square footage, but it was small. I don't, like 1,000 square feet or something like that. And I got this crazy. So in that area, first of all, couldn't get anybody to even look at doing the work because of how backed up everybody was. Couldn't even get anybody to have any interest in a project that was that small. I got one guy who was newer with a newer company to be able to come down and take a look, and he gave me he said like $700,000 or $600,000, somewhere between I think $600,000 and $700,000 to build that. And I was just like, nope, no freaking way. For like the small little place that I'm looking to do, like that number is astronomical and doesn't make any sense at all. And that was when everything was crazy. The demand was so high, and that's when lumber was still at highs. And I was like, I'm just gonna wait because I think that those input costs are gonna come down. And you know, when I go back out there this winter, maybe I'll look to have a couple more conversations about doing it. I'm in no rush to build another house out there. But I couldn't even really get anybody to come and look at a project that I was trying to be able to do. That's how much demand, that's how much building was going on. And just because all of a sudden the economy deteriorated, I guess people can walk away from projects, but I don't see too much of that happening. So you just got all these projects that are underway that haven't been fully filled yet, and the data that I was reading last night confirmed that really more throughout the entirety of the United States, that there's still a lot of like apartment type places that just are still in the process of being built that haven't fully come online yet. So we'll see if that can positively impact the overall housing situation just by creating a little bit more supply that's out there. That's kind of my thought process on it. But the otherwise, you know, if everything from Pat's note, all three of those factors come together, you really are looking at like a total freeze in the housing market, which, you know, is something that could really deteriorate the economy. But I'm a little bit more on the bullish side of that. So thank you for the comment. What are your hotkeys of choice of order entry? I personally use the F keys. Yep, I use the F keys. I use the F keys for my hotkeys. That's right. Andrew S. saying, for anyone looking for instruction on how to set up hotkeys on Lightspeed, there are several videos on YouTube. And you can also reach out to Pat and or the trade support team at T3. If you trade through T3, they can help you out with that. I'm not the person to ask. From Cold Smoke, the one suite of hotkeys I haven't been able to figure out is how to put in a stop, sell, or buy order. Anyone with any advice? You can't get stops in on hotkeys? Reach out to Pat. He should be able to set you up with that pretty easily. Or if maybe Mustafa's video here or manual or whatever is able to help you out. But otherwise reach out to Pat. He should be able to help you pretty easily on that. Yeah. Yep. I know. It's good. It's a good time to be a tradesman. I mean, in New York too. And kids these days, they don't want to do that. I mean, I'll be honest. Getting a $200,000 education to go try to become a TikTok celebrity, or going to learn a trade where you can make 6 figures for yourself. I don't know. And I love what I do, but I almost wonder if I would have done something different. Um, cool. Looks like I got through everything. So I'll wrap things up. Yeah, good stuff today. Really good teamwork this morning. Excited that we had something more to work with today from a trading perspective compared to the last few days. But that's the key to the business, right? Whew. Oh man, that's the key to the business. Like I've been saying for a while, know when to be patient. Last few days you needed to be patient. I didn't feel like we had as strong of an edge, and then today being a little bit more aggressive because the edge was there. And even if today's idea failed, like if I bought a bunch of stuff and I was more aggressive today, and I got stopped out of everything, and I lost money from all those trades that I was putting on this morning, I would still be happy with myself because that's the right thing to do and thought process on a big picture where you are doing things day after day after day after day. Because all we can do is we're working in a game of probabilities. So it is the probabilities. And I really felt that the probability was on our side for buying the gap down on the open today. And if it didn't work out, I would still be sticking to my guns in today's afternoon meeting on doing that. But it did. So good stuff today. Have a great night, everybody. See you all tomorrow.